In this video, we're going to go over a strategy that I trade nearly every week essentially, and it helps me bring in those 3R to 5R trades that I look for regularly, as well as it being quite consistently reliable, but also helps you avoid getting into trades that you essentially want to avoid getting into. So essentially today we're going to go over a supply and demand zone trading strategy that can help you pass those prop firm trading challenges that you're probably taking. So let's get straight into it. So as you can see, I have drawn out a very quick diagram of price action, and then you're probably thinking, so what does this show? So essentially very let's say easily, if we just draw this out like that, it probably makes a bit more sense now that I've drawn out this demand zone. So what we got here is prices moving to the upside, our daily bias is to the upside, or for some reason we're looking for a buy trade, right? Now you can put this and align it with ICT, you can align it with any other confluences you have for a buy or a sell trade. So obviously this example is a buy trade, but if we invert the scale, it can quite easily be a sell trade as well. So let's just go back, but it doesn't matter. So what are we looking for then? So quite simply, all we're looking for is price to move away. Again, our bias is to the upside, so we're looking for a buy, and then when price comes down, we want to see this thing here, and this is the key piece to the move, if you want to call it that. So if I just highlight that, let's put it down as a schematic, this piece here. So why is that key? So essentially this is going to be the inducement part of the move. So if I just type that out as inducement, and this is something that ICT himself has talked about quite often, but essentially it's when price is moving towards a POI, right? And then it induces buyers into the trade early. So obviously you might even have something like a POI over here or something, but then you get that inducement, right? So the reason why we look for an inducement, or the reason why we want an inducement, is because we want price to give us and show us the fake move first. So show me that you're going to induce me, show me that you're going to put a fake move forward first, and then once you've done that and you're out of all your trickery, then we want to look for the true move, which is going to be this one. So essentially all we're really going to be doing is positioning ourselves in this part of the trade. So that's going to be the nice and easy buy trade, right? Again, we're going to target, obviously it says 1 to 6 here, but we'll be more likely to be looking for like a 1 to 3 or a 1 to 5 trade. But again, highlighting the importance of the inducement, that's what we want to be looking for. We want to see price essentially come down, look from this. Now this inducement doesn't have to be a lower high as it's represented here. It can be a couple of candles just showing some sort of willingness to reverse, but it's a fake move. We're going to wait for price to pull lower, and then we're going to get in. Now if you think about back to trades that you've taken where this has happened before, where you thought price is moving away, you've jumped in, and price rips lower or rips higher. Now that's what was happening. Essentially you got induced into the trade, you got duped into the trade, you took the trade, and then it went in the other direction. Now if I just invert the scales, exactly the same thing for a sell trade. Okay, so again, price is coming down, we have a daily bias of down, where our system is saying let's take the trade down. Then you get that inducement, people are jumped into the trade early, they get taken out straight into our demand zone, supply zone, sorry, and then we take that short trade. And that's really simply the trade that we'll be looking for. Now I've already gone and found 2 examples that essentially shows this this trading style and strategy. So for example, as you can see here, we have price moving down. You can see that price is ripping down anyway. We're just taking a trend trade, right? So it follows on with trading with the trend, but looking for that inducement. So where do we see the inducement, right? So very simply, so I trade a strategy called the Asian session liquidity grab, and right here we've got the Asian session high. There's a liquidity grab here, price rips down, you can say that's a breaker structure, and then you'll be looking to short from here. But what did I see? I saw above that we have a very nice supply zone, and price induced here, so that was your inducement. So again, I'll mark it out very simply, just do it that way around. inducement, and then price taps into the POI and then rips lower. So that's where I took the trade. So you're looking at a short from here, stops just above, and we're targeting a 1 to 3 as your first stop, and you can also target a 1 to 5 as well. And as you can see, during the next day you get that 1 to 5 move come to fruition very nicely. So that's trade number 1. Now on the same pair, on the same you say week as well, we actually had this opportunity as well. Now this is a bit of a different one. So as you can see here, we had a bit of like a higher high, rips in, then it taps into the POI, there's your inducement, and you're gone. And I did mention before that sometimes it doesn't have to be like a higher high or a lower high, it can be just a couple of candles just before the POI. Now the reason why you know it's going to be an inducement is because price starts to move away just before it even taps into a supply zone or a demand zone, right? So obviously here we got the demand zone, price starts to peel away here. People think they've missed out, they jump in, and then they probably have their stops just below, and then price rips lower, and then they get taken out of the trade. But what you can see here is if I go down to the 5-minute time frame, here, there is our POI. Price has this inducement here, and then we would look to enter the trade just over here, like so. Let's go for a 1 to 3 on this one, or a 1 to 5. Be very, very easy to get. So there's a 1 to 3, so nice and simple, and then a 1 to 5. But you can also obviously take it higher as well. In this case, you get a very, very nice risk to reward, very simply from looking for inducement before a POI, helping you to make sure you are getting into the trade, knowing you're not going to get duped, and allowing you to take the trade very nice and easily. Now, in terms of what time frames this trade strategy works, it's on any time frame, honestly. The higher the time frame is probably the better, but I tend to trade it on the 15-minute time frame and the 5-minute time frame, because these are time frames that you can say I am better at trading with compared to the higher time frames. So that's it for this video. Hope it helps. Again, towards May time, I am launching a trading software that I think you all will be looking forward towards and be excited about. So make sure you go to my website, www.simulationfx.co.uk, put your email address in and get yourself added to the waiting list. Essentially, I'll be releasing information about what's going to be released, what it is, when it's going to be released, and how you can get yourself on there as one of the first people. So awesome, appreciate that, and I will see you in the next video.